I think first and foremost, both the revenue and the EBITDA have clocked 15 and 16% year-on-year growth, which we're quite happy about. With respect to net profit, like-to-like growth over the quarter, year-on-year has been over 20%. There were some adjustments to be made due to fair market valuation of some change in fair value valuation of some contingencies, besides a higher tax rate and a small 11 crore sort of a net loss from the two new units. Whilst the two new units were EBITDA positive and they had an 8 crore EBITDA positive, but given the transaction expenses and everything we had to book in the current quarter, we had an overall slight lower net profit in the current quarter, lower by 3% compared to the same time last year. Having said that, this year, that means that for the whole year, we are going to have additional 500 beds, which is 15% of our capacity, which we acquired through these two acquisitions in the last month of the previous financial year, which are going to be alive and kicking in the current year. Besides that, we are opening another 300 beds. So that is going to give us 800 additional beds over our current capacity of 3,500 beds, all for the new year.
Okay, so exciting times ahead. Now, what about capital for expansion? Are you well capitalized? Are you going to be looking at raising more capital as you look at expanding your business because you are in expansion mode?
We generate a significant amount of free cash flows, and I'm happy to sort of say that both these acquisitions have been done entirely through internal accruals. And in spite of these two acquisitions, we still are a net debt positive company, that we've got excess cash on our books. And we continue to generate and add to that kitty every quarter. Our entire expansion, which should be at the cost of about $550 million over the next 2 to 3 years, we are funding entirely through internal accruals. We don't need to seek any debt or any equity for those.
Your stock has gained about 47% in the last 12 months. It's gained about 17% in its year-to-date performance. Do you think the market is discounting the potential for the sector and for your business, given where the market has been in the last 12 months and how much the market has re-rated itself?
I certainly think that the market doesn't entirely appreciate the sector. Because in my mind, it's always been a global world-beating sector in terms of the competitive advantage that we have, the skill set that we have, the price we cater, to overseas patients, the domestic demand, the sheer depth of the market and the under-penetration that we have. So it's a multi-decadal opportunity. I think, it's a great opportunity for compounding as far as the sector is concerned. And perhaps, it needs to enjoy those sort of multiples. But, when it comes to respect to company, I always say anybody who wants to play India should play healthcare sector and need to pick up a couple of champions. And hopefully we will always be one of them.